Hi, good morning, traders, and welcome to the opening bell. Today is Monday, May 18th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. As always, Mondays are a little bit hectic, but we made it here nonetheless. So the U.S. dollar is getting a little bit of a kickback after that rally last week. No surprise. The sterling, euro, even Aussie, all taking part in this little bit of a dollar breather. And that takes us right into the start of the week. So some critical levels are in key play on all of the majors. Sterling being the one that's a little bit most wonky at this point, but we'll take a look at the full suite of the US dollar crosses, gold, and oil. Any questions or trade setups, as always, feel free to throw them on the message board. We'll be getting started in just a moment. All right. Good morning, Daniel, Frank. Good morning, Latanya. Great to see you as well. Justin, Kevin, Mesvin. We got a packed house this morning. Great to see you guys. So here's the DXY with a little bit of a resistance kick. Here's the 4-hour chart, just to show you like where we are in trend. Here's what we've been tracking. So we exhausted last night right ahead of our first major resistance lateral level. If you guys even go back to the weekly chart, it's been 99.50. That's been the level we've been looking at. That's the 618 retracement of decline off the high. It's the objective swing high from January. And on the 4-hour chart, it converged on uptrend resistance. This circle was marked here last week, right? Here's the rally. We turned right ahead, okay, from 9-10 pips ahead. Here's the kickback. So we're now testing the median line. Bit of an exhaustive move that you're seeing across the board, right? With all the moves, even the dollar, the euro decline, the sterling decline, all getting some kickback. So at this point, heading into the U.S. trade session on Monday, there's not much major event risk out of the U.S. on tap. You do have Fed minutes on Wednesday. Don't think you'll get much out of that. Remember, Friday was Powell's last day, so the turn of a new chapter for the Fed starts today with Kevin Warsh taking the helm. If the DXY is heading higher, initial support 98.72 into 98.68. That comes in at the 25% parallel. I'd want to see that hold support if we're heading higher on this stretch. You need a topside breach above 99.52 to mark resumption. Key resistance would still be 100 spot 15 into 41. You guys know about this zone. We've been talking about this since the start of the year. Huge zone. 2024 swing lows, 2024 close lows, the highs from back in July, the highs back in November, cap the advance for the year. That's still key resistance. But on the daily charts and the 4-hour charts, this is your first major hurdle. Let me drop this. This is your first major hurdle. So not quite there yet. Maybe a little bit softer of an approach. Bullish invalidation. The level that if broken would suggest a more important high is in place and a larger trend reversal is underway, is a break below key support at the objective yearly open and the 618 retracement of the advance. That gives you 98.30 into 98.23. So initial support, bullish inval, initial resistance, breakout. Make sense? Euro's in a very similar scenario, but not quite. The decline also here turning just ahead of our key supports we've been talking about for the last couple of days. So we noted 1602, guys, into 1597. The low registered right into the open of the overnight trade at 1608. So yeah, 7 pips off the low, but nonetheless, that is key. That's 2 equal legs off the high. That's your January swing low. That's downtrend support. Initial resistance, if we're heading lower in the euro on this stretch, remember, this is a threat of a break of the monthly opening range we got here on Thursday, actually. So once again, that should be resistance. If we're heading lower, 1667, 1681, the median line comes right in there into the close of this week. That would need to hold resistance if we're heading lower on this stretch. Key support, the problem is the targets are stacked up. You have 1602 into 1597, just a bit lower. You have the 618 of the rally off the low at 1578. So both levels of interest, okay, I would want to or expect to see potential larger inflection in price. If the monthly opening range break is legit, the 200-day moving average is right in there as well, 1681, 1667. That should be resistance. Bearish invalidation at the yearly open. The next major downside break for the euro would be on a break of 1578. Both of these levels are pretty significant. Again, my favorites, 100 off the high, 618 off the low. This whole zone could be pretty problematic. So that's euro dollar. Sterling dollar, the cleanest out of the two, but it's only because I've modified this slope. I didn't have this on here last week, guys. Remember, we've broken that late March upslope. This is something I was eyeing out last night. If we connect just basic support and match it to the pitchfork, it would put the median line at resistance and pretty decent levels. So look, sterling is coming off downtrend support as per this interpretation. Resistance is at the 200-day moving average, and the 38.2 retracement gives you 34.83 into 34.38, excuse me, into 34.25. So this zone right here. Okay. If sterling is heading lower on this stretch, rallies should be limited to that zone, should be limited to the median line. Key support, again, downside break below 34.50 is what's going to open up that target. That's a 618. Classic sterling, right? Break below major support, pivot back above. So little speculative here. Remember, this monthly opening range break happened earlier on Wednesday, ahead of the euro and even ahead of the other ones. So it's pretty stretched as it is. I want to give this thing some room to breathe, but rallies need to be limited near term by 34.38 if we're heading lower on this stretch. That's British pound. Aussie hasn't broken the monthly range yet. So I'm neutral on Aussie right here, while still noting the threat for a little bit of a pullback within the broader uptrend, right? We broke support last week. We pivoted below 72 last week. The two levels we talked about were 71.36 and 71.08. We said to look for an exhaustion low ahead at 71.08. If we're heading higher, if the median line, which has been a really nice pivot in price, is going to hold, that basically should govern the loss. So, this is your monthly opening range low as well. This is your August 2022 swing high as well. 71.36 is a level, a pivot zone we've been watching all year long. So first support, second support, the low registered right in between. Not really sure what to do with this, guys. If we buckle back north above 72.13, you mark resumption, period. That's your monthly open. That's the 100 off the high, 620 off the, it's the same Fibonacci sequence level that caught the highs last month. If we break through that, it's going to necessitate a break back above that 75% parallel. Sure, look for 73 all day long. But while below that, I'm a little cautious here. Still think there's a potential for a little bit deeper of a setback within this uptrend, but you're sitting at the monthly low. I'm not going to short into the low. At the same time, I'm not near resistance. So if we're heading lower in Aussie, at least on the near term, rally should be limited to 72.08, 72.13. Downside break below 71 would open up the potential for a larger setback. But low conviction trade for Aussie. On its face, guys, again, trying to take things as objective as possible. You're in the monthly opening range, very clean. Here's your monthly open. You set a low on the 5th day of trade, set a high in the 6th. Look for a breakout of that range. Momentum just right at 50, right? Not really, very low conviction trade there. So that's Aussie. Dollar CAD, a similar scenario in that we are testing a key pivot zone, and like the move needs to happen like really close over the next like 24, 48 hours. Basically, 37.24, 37.33. You've all heard about that. You've heard me talk about those levels for months and months. Don't want to bore you. Big pivot zone in price. That was resistance. We closed above it on Friday. That needs to be support. Here's what it looks like on the 4-hour chart. We'll open it up a little bit, okay? A new pitchfork I've added off here, just off the low, high to low, okay? Has the lower parallel right there at the 38.2 retracement. I'm willing to put that as bullish invalidation. So near-term support, 37.25, 37.33. Key, bullish inval, 36.84. Topside break above last week's high. Converges on the median line now, right there. 37.67. Topside break above 37.67. You're looking for that stretch towards 38. You have the 200-day moving average just a bit higher, 38.12. Big zone. Support, bullish inval, resistance, initial breakout target. Obviously, guys, as always, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals at hand here. Dollar CAD, limited event risk out of Canada as well this week. So watch broader sentiment. Dollar yen, pushing. Woo-wee. I bet you got some fuming heads in Japan right now. So it broke above that lateral level we talked about last week, former support, turned resistance. We broke above it, and even on Thursday, tested it as support. Put some salt on top of that, put some sugar on that, right? And then rallied through resistance at the monthly open, at the last month's open, at the April 17 low day close. We're right there. My feelings about this trade haven't changed one bit. So I'll just leave it there, guys. I'm not trying to buy and test the resolve of Japanese officials. At the same time, I'm not trying to get in short and bank that they're going to come in. So because of the external factors here, no interest. That said, from a technical standpoint, this is still a near-term pivot. Watch what happens today at 58.64. Bullish invalidation would be 57.70 to 57.40. That same key zone we've been talking about for months. Yeah, that now converges on uptrend support. So if this were to give out, I'd be a little bit more comfortable thinking you get the deeper setback, but it's just an ugly trade, guys. Look at the weekly chart. Like, I can't get interested in anything because of this. Remember, this decline 2 weeks ago, it turned off of major critical support. That's from the 2025 lows. That's the 618 of the yearly range. That's the yearly low week close. That was a perfect rebound. So that's dollar yen for you. Okay. Trade at your own risk. The technicals are clear as mud, but at least from a level standpoint, they do look pretty decent. It's just, what way you want to attack this with that X factor of the intervention looming is the question. Okay. Dollar Swiss, just wanted to highlight that resistance zone we talked about on Thursday and Friday. Did hold 78.62 and 78.73. Downtrend resistance, 618 off the high just from the month, from the April rally there, and the 38.2 from the decline, or from the ascent rather, off the yearly low. Major pivot in price. We're there right now. Initial support, 78.16. The monthly open comes in at 78.14. So that's initial support. A topside breach, a close northbound of 78.75 is what you need to really validate that a more significant low might be in place, and a larger recovery might be underway. I was just glancing at this earlier today. There's no way of us knowing that there's any merit to this slope just yet, but I just wanted to show you that if the breakout does materialize, this objective low, high, low looks pretty darn good. Okay, it looks pretty darn good. So again, constructive above 78.16. And I don't want to say constructive, if we're heading higher, monthly open support needs to hold. The April low day close needs to hold. And 78.75 needs to break to see resumption of the uptrend. First topside target would be right there at 79, basically 30, 79.25, 79.26. Yearly open, 618 retracement. So it's too early to rely on this heavily. I just wanted to show it to you because that 25% parallel really turned me on this morning. So looking to see what happens there. Okay. All right. That's everything on the FX front. Gold is holding critical support. Talked about this at length. Nothing changes from Thursday and Friday, guys. It's all about 44.92 into 45.33. That is absolutely critical. That is the 2026 low week close, not Mike Boutros' opinion. Fact. It's the 2025 high day close, not Mike Boutros' opinion. Fact. It's this month's opening range low. All things held constant. Gold is sitting right at support. Someone in the webinar just earlier today pointed out that this may be a wedge pattern or some sort of consolidation pattern that's underway. Could be the case. That's not my base case scenario, but that could be the factor. For me, this is a very well-defined, clean monthly opening range on support. Monthly opening range at support, plain and simple. Downside break would have bad ramifications. You're looking for 44.06. That's the low day close. You're looking for the 200-day moving average and the yearly open. It's closer to 43. Initial resistance is at the objective monthly open. That's 46.22. Bearish invalidation is 46.61. So this is the near-term structure, right? This is the same slope, guys, I showed you last week. Nothing changes. The median line was right there. We were looking for a reaction there. Initial resistance right here, 45.92. Okay, the slope is there as well. If we're heading lower on this specific stretch, that would need to hold. There's the break that would open up the downside. Bearish invalidation, 46.66 is what the bulls need to clear to suggest, again, that a more significant low is, is in place. Questions on gold? All right, that's everything that's on my list, guys. Last but not least, just a real quick glance at oil as prices are a little bit off the highs here. I just wanted to show you. I was laughing earlier with the guys this morning. This is the same pitchfork we added last month, guys, in a ridiculously wild, volatile trade of oil. It's been pretty stellar. Upper parallel catching the highs exactly into the close of April. The 25% parallel, a little messy here, but really nice on support. Median line break, support, 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 75% parallel hold. So you're looking right now for a pullback into this level and for a reaction here. Remember, 101 to 101.50 has been our line in the sand ever since March. Everyone in the room knows that. Above 101, 101.50 panic. Below 101, 101.50, maybe a more significant high is in place. On the larger scheme of things, this is a massive consolidation, a series of higher lows, a series of lower highs. This thing is coiled for a break. All right. 12 minutes to spare. Not bad today. Let me know if you guys have any other questions on your side. If not, we'll go ahead and wrap it up here. The Bitcoin trade, 81,000, did hold last week on a messy test. That approach is coming now towards the objective monthly open, the objective monthly range lows, and key pivot resistance turn support. That's 76,159 to 74,434. Look for reaction here. If this breaks, it would be an objective break of the monthly opening range. It would suggest the potential for a larger setback within the February uptrend, but that's the pivot zone. Okay, so for Bitcoin, it's make or break here into 76,000. Latanya wants to take a look at EuroCAD. Sure. And while we're at it, there is someone who keeps, not that I'm derogatory about it, a subscriber keeps commenting on our YouTube channel that we never cover Euro Pound. And I just want to take a note. I'll cover EuroCAD for you in a second. I just want to take a note, guys, on Euro Pound. The reason I don't cover Euro Pound too often, guys, is purely technical. What about this trade turns you on? If you're a range trader, you probably love this thing. Last couple of months has been support, resistance, support, resistance, support. It's been yin yang, right? But there's not a larger trend in place. Also, the entire yearly range consists of just a 2% move. You're seeing massive stretches on all the dollar crosses. You're kind of playing in a limited sandbox here. Finally, the holding and the margin requirement on this trade is just typically higher. So for me, it's having a proper trade strategy, guys. Not only is technique, it's knowing where to focus your attention and where to focus your efforts. And for me, Euro Pound, if you've been with me for a couple of years, you know, for over a decade, I've been calling this the grandpa trade, because it'll sit and do nothing for 6 months, make a big move, then sit and do nothing for another 5 months, make a big move. Last year was a kind of outlier because we had broken out of a multi-year downtrend. But here we are since the beginning of the year, we're basically unch. So instead of trying to squeeze a water from rock, I just look for where the setups are most beneficial. That said, for the subscriber who's been watching Euro Pound, here's just a quick look at the daily chart. I haven't checked this out recently, but I just want to show you the range highs in last month's open and the yearly open. Look at this. You're already poised to mark an outside daily reversal after breaking resistance. So just like Pound, notorious for the throw over, for the false break. You get it all the time in the Sterling crosses. So near term, threat for a little bit of a pullback within this uptrend. If you get real near term in the price action, here's a basic pitchfork on a low, high, low from the 4-hour chart. It would basically suggest you want to stay constructive while above 86.60s. You need a close and a more resolute breakout here to mark a run on 87.69. but you're right at the 200-day moving average. You're right below the yearly open. You're marking an outside day reversal. Just not my cup of tea. Now, Latanya, back to your question. Sorry to delay that. Here's EuroCAD. Let's take a look what's going on here. I haven't checked this out in a few months, so bear with me. Let me update the chart for you here. EuroCAD. Okay, here's the weekly chart. So a couple things just on an initial approach. This is on the fly analysis for you right here, Latonia. Okay. First of all, momentum, don't like it. We're right at 50. So you're seeing contraction in price, contraction in momentum. That doesn't necessarily mean something bad. It just means that near-term directional clarity is not necessarily going to be one of conviction. Okay. So that's on the momentum front. Secondly, we marked an outside weekly reversal 2 weeks ago off support. We haven't broken out of that range. So as I said, I think that was the previous webinar. But guys, whenever you get an outside weekly reversal, my go-to is typically to go right for a breakout of that candle's range for guidance. Meaning, if you get an outside day reversal off the low, topside break of that candle should mark resumption. If you get an outside day reversal, if I can find one right here off the high, a good example right here off the highs, if that range breaks to the downside like it did here 2 days later, boom, you get the resumption. So I'm looking for a breakout of this candle from 2 weeks ago. The pivot zone is 60.95 into 61.50. That's 60 pip zones, a 2018 high close and a 2018 swing high. Within that realm, you also have the high from 2016, okay, and the pivot from last year. Resistance, breakout, support, support, even into the start of this year. Support, support, break, acceleration, false break here, pull back, we're right back at resistance. So from a weekly standpoint, your focus range break is 59.29, 61.50. That candle break from 2 weeks ago. Okay, you're below the 200-day moving average. Wouldn't take too much out of that. Momentum's right at 50. Doesn't really give us much on that side. Zoom in. EuroCAD on the daily chart. Let me see if this pitchfork is still viable here. It was really clean on the median line and everything, but it's been kind of messy here. So I don't want to stress that blue pitchfork. Okay. Near-term optics. Okay. Peep this. Your monthly opening range. Here's your monthly open. You set a low on the 4th day of trade. You set a high on the 8th day of trade. Your monthly opening range is set right above Fibonacci support. Well, not right above, right around. So you're looking for a breakout of the monthly opening range here for guidance. Momentum on the daily chart, slap at 50. Ugh. Drill down deeper. Here's the 4-hour. Okay. Let me see what this looks like real quick. Let's see what the buy sector looks like. You're 50 in momentum in every single time frame. That's crazy. All right. So look, your monthly range is set right below resistance. So watch for a breakout here. The downside from last month still remains prominent below 61.52. Okay. If you break the monthly open, your monthly range low is right there. You know what? Drop this 38 too. Do this. There's your monthly range low. And there's your monthly open. Key near-term support, key near-term resistance. Look for a breakout within the downtrend from last month's high. The broader trade, since the start of the year, you're basically unchanged. The yearly open is right in here as well. There's a lot of reasons why I'm not really particularly a fan of this trade right now, Latanya, but you're trading below a pivotal zone. Let's just put that. Look for that breakout of last week's range, the monthly opening range. You're right below resistance. Does that help? Not a trade I ever actually typically look at, but it is sparking my interest here. So Maybe we'll track this one throughout the course of this week. Okay. No other questions. We'll go ahead and wrap it up here with 3 minutes to spare. Best of luck trading. Stay nimble here early in the week. We're waiting on those headlines out of the Middle East to see if anything materializes with some sort of negotiation or agreement. The oil trade is going to be central focus. Watch this kickback as we head back to that pivotal support to see if there's any favor on that front. Latonia says, yes, thank you. More than welcome. As always, guys, my pleasure. I'll see you tomorrow morning, same time, same channel. Till then, best of luck trading. God bless.